while you're seeing this really strong economic data today, just keep in mind that is just a function of how economies work, and it's not uncommon when you're spending $1 trillion, that money is going to translate into a short-term boost in economic activity. The problem is sustainability. Here's what you need to know before the bell this morning. Yesterday, not a pretty day for the markets by any stretch of the imagination. We now have, we talked earlier this week is that, we had broken the 200-day moving average. We needed a confirmation of that break. We got that yesterday because, as we talked about, we broke the 200-day moving average. Then we rallied, got back above it. So again, there was this moment here where it looked like we had negated that break at the 200-day. However, yesterday's sell-off was a confirmation of that break because basically we failed at the 200-day moving average, have now turned lower and broken well below that previous bottom, as well as failed at that test of the 200-day moving average. So you now have a confirmed break of the 200-day. This is going to bring 4,100 in as the next target for support. So this 4,100 level, we're about 4,170. So we've got about 70 points of downside here in the markets here short term. That 4,100 level is the 50% retracement of the rally from October. So once we had that big rally, and we've now given up about 50% of that rally. That's normal within the context of a correction. So again, this isn't the beginning of a big bear market, those type of things. So kind of keep that in context as well. But a retracement nonetheless has been kind of ongoing here for a while. We continue to work inside of this very defined kind of downtrend channel of the market as well. That's going to coincide also with that support at 4,100. So again, risk to the downside currently. One thing to note though is that the markets are oversold here short term, and the MACD sell signal, which is back in place, and we talked about that earlier, and that's why we're getting these weaker prices. Those are also at fairly low levels. So most likely the downside here, at least near term, is fairly limited. So what we're looking for here is a potential rally that gets us back up to around 42.20, somewhere in there. Some type of rally like that will give you an opportunity to reduce some risk and raise some cash until we kind of figure out what the next leg of this cycle is going to be. Importantly, as we start to move into the end of the year, November, December again continues to still be a stronger period of the year. And in fact, if you look at kind of seasonality, we're kind of at the point, you remember last October, very tough couple of weeks in the last 2 weeks of October. Then you had that really strong rally in November, December. We're kind of back to that same level at this moment. So again, kind of our range of targets run from about 43.60, which is the 50-day moving average right now, at 42.80, somewhere in there. You've got some moving averages coming up that are going to provide some resistance to a rally, but there's probably a fairly decent probability of a reflexive rally that we can use to sell into, rebalance portfolios, reposition for what we think is going to happen as we get into next year. So again, be a little cautious about panic selling right here. Again, markets are oversold. You're going to be due for a bounce. Use that bounce to rebalance as needed. That's what you need to know before the bell this morning.